Well, welcome, welcome, welcome. You have now just hit another edition of the Black Wealth Experience podcast, as well as the Mile High Real Estate podcast. And I'm excited today because we're going to talk about something we don't always get a chance to talk about, and that's on the insurance side of things. I have Farley Burrow that I have with me today, and just a wealth of knowledge. He's been doing this business for a long, long time. I did do a podcast with his son, so you want to check that out. He's on the mortgage lending side. But just one of the things that just reminds you, we want to get you into a home. And the reason that we're doing the reason these podcasts are so vitally important is because we know that home ownership is the number one way to start building generational wealth. It also is the number one way to start building personal wealth. And whether it's home ownership in the home that you're living in, home ownership in investment properties, it all goes together and it starts generating wealth. One of the things that happens to us is we think that there's all these expenses that we have now that make it so it's more expensive than if we were renting. And here's what I'm telling you. So let's say you're paying, and I say this a lot, $200 a month or $2,000 a month for your rent wherever you're renting out here. And if you're in the Denver metro area, that might even be low. That's $24,000 a year. You times that by 10, that's $240,000 over 10 years that you've now paid on rent. And one of the things, and that lets you know when people talk about interest rates, that, by the way, since you're not making anything on it, is at 100% interest rate, right? Because you're paying for that other person's a home. But just to kind of clarify some of the things, one of the things that people tell me a lot is, well, what if something breaks in my house? I have to fix it. And maybe I don't have the extra money. And if I break something in my apartment, then the landlord fixes it. And I'm promising you right now that you're still paying for that. The landlord just added it to your rent because he's not coming out of his pocket to pay for anything that goes like that. And so the same thing happens on, I don't want to have to pay for insurances because insurances can cost me too much money. But if you don't have the insurance, that's when, I just had a gentleman, he got his roof fixed. And what was kind of really funny about it is we were doing something. I'm sorry, I'm fixing my camera here. It was just kind of messing up a little bit. He was like, I said, I am so sorry that your roof got the hail damage. That's what he told me. And he goes, I'm not. I've been waiting for 10 years to get my roof redone. And so the insurance company, obviously he paid for it. And there's some things that insurances do. My mom had a big flood, something happened, and, they're super important and they're there when you need them. I would even say homeowner insurance is even better than car insurance and that kind of stuff as well. Just because car insurance can, that goes up and down and you're always fighting. But the homeowner insurance, when you need it, it is usually there and the insurance companies take care of you. And so even though it might be an additional expense that you don't pay on the apartment, like I said, I promise you, you're paying for it because that is all included in the one-time fee of the rent that you're paying. And so you look at it. So Farley, I am so glad that you are on. We have been waiting to do this. We have been waiting to talk to each other in this medium. Knowing that we kind of grew up here in the same part of town and the same things going on. And just knowing that, that you are here to help folks out. So what I want you to do first is tell everybody how to get a hold of you. Then second, I want you to kind of tell a little bit about how you got into this industry, why you're in this industry, what it is you're doing, and then we'll just chop it up from there. So go ahead.
Oh, thank you very much, Brian. Yeah, my name is Farley Burrow, and I've been fortunate enough to be in this industry for approximately 40 years. I'm
You said
currently
40, right?
yeah,
40,
40 years.
so you know what you're doing.
Exactly.
Okay.
And I'm currently with Liberty Mutual Companion Insurance,
Okay.
located at 4582 South Oster Street, Suite 300, Denver 80237. My direct number is 303-522-6473. And pretty excited to work with this organization as far as an insurance broker. I started my career off with about 24 years at Allstate Insurance on two different agencies, and I was a district manager for about 10 years as well. And that's where I learned most of the industry at Allstate. Then I did transfer to the financial service industry, worked for Prudential Financial Investments for 9 years as a sales manager. In 4 years, I was the recruiting manager for the Denver, Utah area. That was quite exciting. I had my Series 6, 63, and 24 as well. And my charge there was to develop and mentor financial planners, investment advisors as well. Then I transitioned to farmers insurance.
All right.
And I worked with the farmers insurance platform for about 4 years as well, and then transitioned after COVID right back to the comparing
Yeah.
Liberty Mutual process. And the main reason why I switched from a captive agent, such as working with the Allstate Corporation or Farmers Insurance, as an insurance broker, I can broker out about 20 different products, companies, such as the Safecos, the Liberty Mutuals, the Progressives, the Travelers of the world. And it gives my clientele a little bit more opportunity. Instead of just shopping one store, I can shop different companies to find well, the best way to put it, to help satisfy their needs. So that's where we are right now with the Compare platform.
Well, that's so cool that that you've been in different places, so you know exactly what a client may need at this point, and then to switch and transition over to a place where you can give options. I think is so important. As one of the reasons where the lender that I'm working with, it's not like at a bank where if I'm at Wells Fargo, right, I can only offer Wells Fargo loans or
Exactly.
First Bank. Now I have the ability to offer what's best for the client. Are they kind of talking to me a little bit about insurance and why insurance is so vitally needed and important, and then maybe some of when you're shopping, because I know like first time home buyers are usually we're saying okay, you have to find an insurance company that's going to give you. What are some things that they should look for, or some things that they should avoid maybe in that process?
Well, first of all, it's so important to ensure what's important to most folks. Uh, as far as their homeowner products, which is so important, extended to the auto insurance. And to be quite frank, I think maybe the most important thing that people should be thinking about is insuring their life as well. But starting with the homeowner products is so important because it's kind of a scary market right now. And what I mean by that is the loss ratios are so dramatic with most of the more major corporations that a lot of them are pulling out of the homeowners insurance market. It's kind of a scary issue. For example, State Farm Insurance, who's the largest carrier in the country, has just pulled out writing homeowners in the entire state of California, Florida, and Pennsylvania, which is kind of scary because what they're saying right now, the loss ratios are so dramatic in these areas that they're decided we're going to hold off and don't even offer products in that area, which is scary. Then you have other companies that are really tightening up the guidelines because you're having companies now that are looking for clientele that have zero claims. And they're even charging you if you have a zero claim paid out. Some companies aren't even accepting you as a risk. So it's kind of scary. One other thing to think about as well is roofs. Roofs are so important in the industry right now. And where you want to look at is hopefully you can always find that great home that has a roof that's at least 10 years young. And what I mean by that, because you are receiving major discounts for the roof discount. Now remember this. Let's say if you buy a brand new house and you'll get a major discount for that roof. Each year, the discount is going to just drop slightly. Each year, it drops slightly. In that final 10th year, the discount drops off automatically. So that's very important. And then what they do look at is what type of roof that you have. Do you have a wood shake roof, which a lot of companies don't take? Do you have a weather resistant roof where people's companies give you additional discounts? So roofing is very important. Year is very important as well. As you would assume, most carriers would prefer to insure a home, for example, a 2021 home versus a 1953 home, just because of the risk. And so you got to remember, so the older your home is, the more difficult it might be to get a proper insurance quote for that home. So unless it's refurbished. Now, if you've had it, the electrical piece refurbished, your plumbing, your roof, then they'll consider that if you just had it recently completed, then they're going to treat that just like a new home as well. So you got to look at those issues as well. You're always trying to find a home as well that has been very, very well taken care of. Because in the insurance industry now, especially with everything tightening up, they really look at home ownership and how people take care of their home. For example, if you have a beautiful home that you've been taking pride, the pride of ownership, whereas the home really looks nice, There's no trees on the roof, things of that nature. Oh, that is a much, much easier home to insure. If you have a home that has a lot of, well, trash around the home, it hasn't been taken care of, roof is kind of damaged, shingles are falling off, that home won't go through underwriting. So what they're looking for is the quality homes that people have taken care of as well. And that just kind of transitions the exact same thing when it comes to auto insurance. With auto insurance, just remember this. What we do in this industry is we try to bundle products. Auto and home, you get a major discount on the home, major discount on the auto. So if you're able to bundle your packages, generally that's where you should be. It's going to get a major discount on both products because companies like to have both products available to you. Plus, it helps you out because you have one agent that you can work through, one customer service, and one claims department that you work through as well. So kind of keep that in mind. Now, the only concern with bundling is much, much more difficult now. And
Oh, it is. I didn't know that.
yes, it is. And the reason why, remember, when organizations are looking at a risk, they're going to always pull what's called a clue risk on a home. The clue risk really is kind of determining, it's going to pull up every single claim that house has had. It will even pull the claims prior to your ownership.
Oh, I
So
didn't know
it'll pull
that.
all your claims up, it'll pull all the activity. It will, but what it also does, it pulls a soft pull on your credit. Because
Really?
remember, credit is involved when we're
Yeah.
when we're trying to insure and underwrite
Mhm.
homeowners as well. So they'll pull the clue, but then with an auto quote, we'll pull the motor vehicle record as well. And just to pull all that together with your credit, with your claim history, and with your ticketing activity will determine your rate. And naturally where the home is in your zip code. Because remember, rating is always designed by loss ratios as well.
Gotcha.
So, so for example, if you have, let's get back on auto, then we'll go back to home.
Okay.
So, for example, if you have a community that has a ton of liability claims, well, guess what? That area, when you rate, is going to be a much, much higher rate for the liability risk
Gotcha.
in that
Okay.
area.
Mhm.
But you might have another completely opposite area in a different part of town that has major, major problems with auto theft. Well, guess
Oh,
what? At that point in time, you're going to see it in the rating package because the collision and the comprehensive rates are going to be much, much higher than the prior area, just because where the risk is. So that's how it's kind of determined when you're talking about factors or rating homes, or rating auto policies as well.
gotcha. So I got a couple questions here. One is you brought up this thing of credit. How does credit, like if I don't have good credit, how does that correlate to I'm needing to get insurance, or why an insurance company would say I'm a bigger risk or charge me more if I don't have good credit? Explain that to me because that
Well,
kind of is.
I guess what everybody always wants a great credit risk. So, for example, even think about it this way: when you go out and you pull up your credit bureau scores,
Mhm.
a lot of your credit bureau score is going to be determined on your credit. How often do you pay your bills? Do you pay your bills on time? So with our industry, like most industries, are always looking at credit as well. And I think folks with the better credit, most companies consider would be a better risk. Also, I believe this is just my personal feeling. I believe a lot of these companies are just kind of considering a person or a family that has great credit might have fewer claim losses as well. And
That's
that's something to consider as well.
yeah, maybe a correlation of taking care of your house to having really good credit. Like you said, we're just speculating here. We don't know the exact
Exactly. You
reason
really
of
can't say
that.
that.
But some of those things make sense, as to why, because that's the first question somebody would ask me is, well, what does my credit have to do with whether the hailstorm comes? It doesn't, but also you still have to take that premium, and if you're not making the premium, that means, then they're having to do, collections and come after you, and they
Exactly.
probably don't want to do some of those things that are there. Yeah, so that was my question there, and then I can't remember what my question was on the auto insurance, but I think it was just on on this whole bundling thing and figuring out you know um, when I think of somebody who is parking in a garage, they can probably get if I'm telling the insurance company my car is in the garage all the time and that's where I park it. So the chance of somebody stealing my car is a lot less than if I live at an apartment, that's on a busy street that somebody can come in and grab. Am I correct? I mean, is it,
You're correct. You're
it
correct.
yeah. So what I'm thinking about, people saying, well, I'd rather live in the apartment and not have a garage, but then you might even be paying more on your auto insurance than you need to because you don't have the ability to park it, inside of a safer place or inside of a neighborhood, or you're in one of those apartment complexes where there's a lot of thefts or something like that. So you could be paying
Exactly.
more.
Well, the garaging isn't doesn't come into play that much.
Okay.
What comes into play is the loss ratios. So,
Okay.
for example, that's where it comes to play, where it kind of can affect rates, because consider if you're having a lot of cat losses, which we call like
Okay.
hail losses, things of that nature, tornadoes,
Hmm.
hurricanes. Come on, who would ever consider that we're having the type of weather and
Oh my God.
storms in California, all the hailstorms in Colorado and Texas recently, all the flooding back east? That's all a reflection on rate increases. And think about this way: if I have a beautiful home that I purchased, or even if I rent a home and I have my car garage in that location at all time at nighttime, it's a much greater chance that I will not have a comprehensive claim, or which would mean a theft.
Hmm.
Because remember, comprehensive covers theft, vandalism, fire, explosion, hail damage, things of that nature. Now, the folks that do have their cars garage generally don't run into as many thefts because it's hard to steal your
Hmm.
car, but also it protects you from the hail claims, the vandalism, the hurricanes, the things of that nature. So that's where it comes into play, where you're just protecting your vehicle. Because remember, you have those losses on your auto insurance, your rates do go up.
Yeah, that's one thing that, like my mom said, right after the flood happened in her home, and it was, a faulty part in a toilet or something, that thing that comes up from the water. She said before they even started fixing the house, her rates went up. It wasn't even, letting the
But
drywall dry before they were like increasing the rate
but
on her
but
a little bit.
but Brian, you got to remember now, there's not an
Hmm.
insured in the United States that's not going to be receiving a rate increase at every renewal. That's the
Yeah,
scary thing. That's the
that's
scary
true.
thing about insurance. I
Hmm.
started this in industry 30, 40 years ago, and you have a rate increase, maybe an 8 or 9% rate increase. And it might be a year, 2 years, depending on what company or carrier. And then take another rate increase depending on their loss ratios. It's to the point now that every carrier is taking rate increases. And I guarantee you, 90% of all insurers will be receiving rate increases at their next renewal, if it's auto or home, doesn't matter. And
Hmm.
it doesn't matter what carrier. The loss ratios are terrible in this industry right now, and these companies are trying to catch up. So that's why I'm here.
Hmm.
As you're receiving those, let's face fact, as you're receiving your documentation for your new declaration pages for auto and home, and all of a sudden you've noticed you might have had a 10% rate increase to 35% rate increase. I've seen it. At that point in time, you'll reach out to me, hopefully. And what my position and my charge is to take care of you. My job is not to write everybody new packages with insurance that I talk to. My charge is to protect you and to educate you on our industry, to make sure that your
Yeah,
package premiums are properly
yeah.
set up. Hopefully, I can replace you to a different company to save you money and give you better coverages. But at the same time, my job is to make sure, after my conversations, if I switch you over to a new company or if I don't, that you're in a better position after you spoke to me. Because even if I don't switch you to a different company, my charge is to educate you, make sure that your policy is doing everything it should be doing for you. If you need to make adjustments, I can recommend what adjustments should be made, so you can reach out to that insurance company with that company to make sure that those adjustments are completed. So what my job is to do, not just to be a professional sales person
Mhm.
where I'm just trying to collect dollars. My job is to work with my entire community to educate you, let you know about the changes in the industry, and make sure that you're properly insured. Because guess what? Accidents are called accidents because you never know when they're going to happen. I don't care if it's an
Yeah,
auto or a
ab-
homeowner, a boat, motorcycle, wrecked vehicle. It does not matter. It's an accident.
absolutely. And what I love about like where you're at now, and your ability to be able to find the best thing. Because one of the things that I don't know if it was my dad who taught me, or I was, as I was doing work, where he said the insurance company doesn't love you. The insurance agent may, and he'll take care of you, but the insurance company they loved your money and coming in, and they're going to pay out, but they don't love you. And you should probably check about every year to see if you're getting the best bang for the buck that you're paying. And because
Exactly.
they do fluctuate and they change. And so somebody like you, Farley, he has the ability to say, I can call Farley every single year and he can find me the best deal. Where you were before, where you a State Farm or you're at Allstate, when I called you, all you could tell me is this is what
Their
Allstate
product.
rates are this year, right? You can't
Exactly.
really shop me against everybody that's out there. And so when we're thinking about wealth and we're thinking about growing, there's your money is going out no matter what. You're going to put some money out.
True.
Insurances are important because you need to have them or it could devastate you financially. So insurances are super important, but it's also important to be wise with that amount of money you're putting in. Y'all, it's only an extra $10 or it's an extra $20. Over a 10-year period of time, that adds up. It becomes thousands of dollars. And if you're paying, let's say on your auto insurance and you have, this is my example because I have 8 kids, when they were teenagers, it's like, oh no, you don't need to drive. I was even thankful for some of my kids who didn't want to drive
Mhm.
just because of the rates. But then, there's that little section between like 21 and 25 or 27, where those rates fluctuate so much depending on where they're living. I'm saying if you move, you're checking it. If you're, every single year you're checking it, because those could be a difference of thousands of dollars, not just for them, that money they could be putting in savings and that kind of stuff,
Yeah.
over rates, different companies that are there. I mean, I guess you could attest to, is there a better, I mean, the best people to insure, like I guess between like 35 and 55, on just
It
about
change it,
everything.
it changes and stuff. Just
It
like, for
does.
example, just like we're talking about credit scores,
Mhm,
where how they affect and the clue scores affect
mhm.
insureds now. Uh, this is important as well. Remember, and I want all the public to know, your prior liability limits affect your new rates on
Okay.
auto and home. And that's very important to know. For example, you got minimum liability limits for auto insurance 25, 50, 15. All that means it's a triple limit. If you get in an accident and get sued, the insurance carrier will pay up to $25,000 for the lawsuit. If there's more than one person sued, they'll pay up to 50,000. If they have to pay for the property damage of the other vehicle, they'll pay 15,000 for property damage. Well, that goes nowhere. That's the minimum liability. Then you
Uh-huh.
can bump up to 100, 300, 100. You can bump up to to 250, 500 liability limits. You can go 50, 100 as well. So what you're trying to do is you try to stay away from the minimum liability limits because most carriers don't want to take on customers that are carrying minimum liability limits. So for example, if you're carrying a 100, 300 liability limit on your prior insurance and you come to any insurance carrier and get rated, your rate is going to be not a much lower, but it's going to be a lower rate because you came to us with higher liability limits versus that customer that had minimum 2550. So that's important to know because liability does not just affect you when it comes to your claims, it affects the new ratings that you're receiving as well.
Wow.
The
Okay.
same, the same with homeowners insurance, Brian. For example, the person that carries the 100,000 liability limits, which is minimum liability, no, the rating is going to be a little bit less expensive when you go to shop. And most companies, customers are going to be shopping. But if you're carrying a 300,000 liability, which does not cost that much more in a homeowner product, or 500,000,
Mhm.
you're going to get a better rating versus that customer that comes with a 100,000 limit.
Wow.
Also,
Mhm.
also, which is very, very important that most of our consumers should know is how to select a homeowner, a condo policy. It's very important. And what I mean by that, always want to make sure that your home is properly insured when it comes to your dwelling with full replacement cost. And I'm not saying you need to overinsure your home, but you want to make sure that your home is adequately insured for full replacement costs. And what will happen is most companies have a replacement cost factor. As long as you insure the home for that amount of money or the loan amount, then it will, and you add the replacement cost. All that means is if you had a home insured for $500,000 and it takes 600,000 to replace it, total loss, they pay the 600,000. So you want to make sure that you have replacement costs on your homes. Secondly, you want to make sure and check on your deductibles. As you know, years ago when I started, the standard deductible in this industry was $250 for a home. Standard deductible for homeowners now is 500, mainly 1,000. So you can go $250, which most people don't carry. They can't afford it because remember, the higher the deductible, the lower the cost of the insurance. So you can go to 500, you can go to 1,000. A lot of people carry 2,500, 5,000. So what's important to you to know is and for your family, select a deductible that you can afford at time of loss. If you can't afford a $5,000 deductible when you're trying to save money, don't go with the 5,000, because if you have a claim, you're not going to be able to file the claim, because we're going to pay minus the first $5,000. So you got to kind of determine what deductible you want, all peril. Now, the second thing when it comes to deductibles is a second deductible, which is called wind and hail. There's so many claims out there with hail damage and wind damage in the state of Colorado and most states. You have a separate deductible for wind and hail now. And most companies won't go any lower than, you'll have some companies will go $2,500 on the wind and hail deductibles. Most companies now will go either 1% of the value of the home, 2% of the value of the home. You can go 5%. So the wind and hail deductibles are much, much higher. So you'll have a separate deductible in this industry now for your all peril deductible, which covers you like fire, lightning, explosion, theft, vandalism, versus your wind and hail deductible, which is always going to be a higher deductible.
Yeah.
Then you look at what your liability limits are. Most policies come with a $100,000 liability limit. Always bump it up to $300,000 or $500,000. It might cost you $20 a year more. That's $1 or more a month. But what it does for you and your family is if you have any type of lawsuits that come at you, as long as they're not work-related or auto-related, that's covered through your liability insurance. And $300,000 or $500,000 goes much, much more higher, especially if you have children, animals, trampolines, swimming pools. Thirdly, you always want to make sure that you have some type of water backup. For years, agents were writing these homeowner policies without water backup, and all of a sudden your toilet backups, there's no coverage. So you always want to go with some type of water backup. These coverages don't cost that much more money to increase, but it's the insurance agent or broker's job to educate you to make sure you have the proper coverages, such as your loss assessments if you have a condo or a townhouse. That's so important, because what this does for you, Brian, for example, especially in the world of hail damage now in Colorado, all of a sudden you have this townhouse or this condo community, and all of a sudden they have major roof damage on a claim. Well, you know what they're going to do? Their insurance company is going to pay for that $2 million roof to be replaced or what have you. But guess what? They're going to go through loss assessments to collect their dollars from the owners of the community in the townhouses or condo. So all of a sudden, what they're going to do, they're going to take the amount of the loss assessment, they're going to divide it into the amount of ownership, and whatever it comes to, if it's $10,000, if it's $15,000, that's what you owe for your loss assessments. But guess what? What's a good way to take care of that? Bump up your loss assessments on your condo or townhouse policy to maybe $15,000, $25,000, which does not cost that much more, but it gives you a better way to sleep at night, because if your association ever hits you with the loss assessments, it's covered under your policy.
Wow, I didn't even know that was a possibility to do. I'm learning something today. You're telling me some really cool stuff, because I need to tell people that, because I didn't even realize that. I haven't lived in a condo before, so that's wow. Yeah, I'm just thinking, when you said you give a number like 5%, and you give that $500,000, amount, the house or whatever, and so if it's 5% of the value of your house, that's like a $25,000 deductible on a roof or something.
Hello, and so, but imagine the folks. For example, let's say realistically, we got a $700,000 home in Colorado, and we have a 2% deductible. That's $14,000.
Yeah.
So you got to be careful when you got to
do the math.
Talk to your insurance agent and make sure that you're properly covered, because that agent might give you a great quote, and all of a sudden you got a 2% deductible for wind and hail, and then all of a sudden 6 months later, this major hailstorm hits in Colorado, which they do, hit, and then you call up your insurance agent to file your claim, and they tell you, "Oh, Mr. Customer, we're so happy that you reached out to us, and we're more than happy to take care of your claim. But oh, by the way, you carry a 2% deductible, which means that's $14,000. So we'd be more than happy to take care of that roof minus that first $14,000." That's an alarm to a customer. which they do not like, and which, as an agent, I would hate to put anybody in that position.
Yeah.
So it's our job to make sure that we educate these customers prior to claims, because as an insurance agent, we're not writing business to save a customer money. What we're doing is we're writing that home or that auto, or that motorcycle, or that RV to make sure it's properly covered when the claim does exist. So
Yeah.
what I do, and I've always learned this the last 40 years, I'm writing a policy just assuming there's going to be a claim.
Hmm.
Yes, it might be 5 years, it might be 5 months, it might be
Wow.
25 years, but
Yeah.
a
There's going to
great
be a claim.
insurance agent's job is to write and just assume there's going to be a claim. So
Mhm.
if it was personally my claim, I want to be taken care of properly. So I want to do the same thing for my family, my relatives, and all of my book of business.
Wow, that is so huge. Writing the policy not is if it happens, writing the policy, it's something's going to happen and you're going to need, and how would I feel if I wasn't taken care of properly? That is such an amazing way to go. Farley, I hate to say this, but we're running out of time here today, and I'm going to have you back if you're willing to come back.
Definitely.
And so, what I'd love for you to do is, I want, because this is such good information, I don't want to just leave folks without being able to get a hold of you. So, one more time, how do they get a hold of you? And then any other closing thoughts that you want them to know about this whole insurance industry, why it's important to call you, and just kind of leave us with some really good thoughts before we come. And then, like I said, I'm going to have you back on in a few months. We're just going to chop it up again, because some of this stuff is so vitally important with all the disasters and everything that seem to be happening more and more now, all the thefts, all just the things why we need insurance. So, again, how do we get a hold of you?
Okay, you can reach Farley Burrow at Liberty Mutual Comparing Insurance. My phone number is 303 522 6473. My email is Farley, Farley dot BURL at libertymutual.com. And closing statements, just as you're starting to receive your renewals for your auto, your home, your RVs, your motorcycles, there your majority of you going to receive a 10 to 30% rate increase. It just depends on what areas, it depends on what carrier you're with. I wouldn't get upset with the insurance agent or broker. It's nothing to do with them. What it is these companies are having such great loss ratios, they're adjusting all their insurance rating just to survive. So it has nothing to do with the agent. But what I would recommend doing is always, when you get that renewal and you're upset, still reach out to the agent. See what that agent can do as far as adjusting, if they can put you on a better plan. Maybe your needs have changed and you can need to adjust your insurance plan to meet your certain needs, and it might lower the cost. But also be willing to reach out to other carriers such as me to find out how we can help you, how we can transition you, and educate you at the same time, just to make sure that product is well for you. And then last but not least, always, and this is so important, we always talk about our homeowner products, our auto products. I feel the most important product and the most important thing in life is your life.
Yes.
And so I'm always thinking about life insurance. I think that's the most important product, and we do offer that. And we offer different types of products. And the next time I'm sitting with you, I'd kind of like to get into more like the life insurance.
Let's
What does
do
a
that.
term policy mean versus a whole life policy versus a universal life versus an index universal life products, annuities, and how they can work for your family for your retirement, or not just for retirement, but for immediate needs as well. So I'd love to discuss that with you at a later date.
Absolutely. We got to get on that. I do living trust as well. And it's all part of that whole package of creating generational wealth and what that looks like after somebody passes away. So we'll do a special edition one, just because it's so important of what we're talking about. I know we've been talking about the new home ownership and that kind of stuff, but you're right. Life insurance is so vitally important to be able to take care of the legacy that you want to leave and creating that generational wealth. So, Farley, loved having you on today. It has been
Thank you.
amazing. It has been enlightening. I can't wait to have you on again. I just appreciate your time. And as you know, I try to end the show this way every time. Is you can do this. You can get your new home. You can get the right insurances. You can get yourself set up to create personal wealth. You deserve this. The America is built on helping folks out, getting to where they need to be. But sometimes people get slipped down the cracks. So you deserve this just like everybody else who gets to be part of this country. And then the last part is let us help you. We are the experts that spend our time, Farley in his case, 40 years doing this. He probably knows what he's talking about. In fact, I know he knows what he's talking about and can help you, at least guide you. And even if you don't use Farley as an insurance agent, I know he's the person that he will give you the same advice that he's going to give you, whether you get to be his client or you don't get to be his client. That's not the game that we're trying to play here. We are trying to help people build personal and a generational wealth here. So thank you again for being on. Can't wait to see you on the next one. You guys have a wonderful, exciting, incredible day today.
Thank you.
This is Brian Arnold, and if you are listening to this part, you've just watched one of our episodes of the Mile High Real Estate Spotlight, where we've just talked to one of the best of the best. And I want to thank whichever guest that was here. They are phenomenal. They are amazing. They are the top of the top, the best of the best that are in our industry that are here with us today. And so I encourage you to please call them, pick their brains. They work for you. They enjoy working for you. They are incredibly good at it. And so I want to make sure that you give them a call. So whoever you listen to, whichever one you saw that you were there, please do that. The other thing is everyone deserves a home. Everyone deserves a home. I say that at the end of my show. You deserve it. Let us help you do it. My goal is to make sure that we see homeownership. It just sickens me to see apartment complexes continue to go up, because I know those are people who haven't been able to make the call or figure out a plan. So let us help put that plan together for you. I have some websites that allow you to do that, and I'll put those in the bottom, but please do. I am a lender. I do work in the lending space. If you do not already have somebody who's pre-qualified you, I would love to be able to have that opportunity to earn your business and qualify you. My number is 720-682-2223. That's 720-682-2223. Give me a call anytime, and I would love to be able to help you with that. We also do living trust. And so when we think about an estate, to try to avoid probate and make sure that doesn't happen. So whether it's you, if you own a home, and you should have a living trust. And I will say that everyone not just deserves it, everyone needs a living trust if they own a home. And then finally, just wanted to thank you for watching these episodes. And so please tune into more. Would love for you to see and be able to shop around. So thank you for doing that. Again, I want to make sure that you know that you can do this. You deserve this. And let us help you make it happen. You guys have an awesome, wonderful, awestruck, incredible day today.